Right, good morning, everybody. Excuse me. Welcome to the room. Good to have you. Hope you're doing great. The counter trend counselor. Yeah, my counsel would be why bother? Why bother going counter trend when there is so much good stuff to be had trading with the trend? Good morning, everybody. It's great to have you here. Just for the fight. It's the pirate in you, Ron. It's the pirate. Guys, remember that this is an educational and informational room. I will, under no circumstances, tell you when to enter a trade or tell you when to exit a trade. What I will do, and this is my promise to you, Paul, have a good one, man. Go enjoy your afternoon. Some days it's just better to walk away, right? Guys, news. Was everybody watching 8:30 a.m.? How crazy was that? The market spiked and bumped and jumped, and it was absolutely outrageous. I want to show you something cool. I think it's cool. You ready? Even during psychosis, they respect Fibonacci. Even during psychosis, weak triggers don't push the market up higher. Guys, it was pretty outstanding to watch the market. I had my large chart open, and they went from fib to fib to fib to fib while they worked it out, all the way down to support to resistance to support to resistance to support to resistance to support, where they finally ran out of steam and started the move down. When you hear the old adage, buy low, sell high, you know exactly where it is. You just got to be patient to wait for it, guys. So at 9:45, we have more of that red high impact news. Set a note, get with Siri, do whatever you need to do to make sure that you can sidestep that emotional reaction that comes from the market. Where is everybody? There's only 9 of you here today. It's a good 9, don't get me wrong. But I wish we had more. I feel like I'm going to be smart today almost. We're going to read charts. Yesterday I broke up. Hey, good morning, Justin. Yesterday I broke up the PowerPoints, and I'm not going to lie. I like the old one, guys. One of the things that I find is I get the super simple approach, and then I try to change it, and I always go back to the super simple approach. So we're going to do it again. We're going to go back to the super simple, guys. Let's learn to read our charts. We're going to focus on 3 rules, 2 charts, whether you are on NinjaTrader or whether you are on TradingView, my friends. And remember, they are different. So if you're on NinjaTrader, your rules, your chart read will be different than if you are on TradingView, and vice versa. It's important that you know which platform you're on so that you can follow a plan that you can prove wins more than it loses. We're going to focus on chart reading, reading indicators to recognize advantages. That's it. We are going to learn to recognize advantages. Your advantages become your trade. And chart reading is about 90% of your day. Active trading is about 10% of your day. I have been in the market for a grand total of maybe 6 minutes today. And I'm done trading for the day, which is outstanding. You will understand through your reading, guys, where the market is likely to continue. These continuation spots become your entries. You're going to understand where the market is likely to go. This is going to help you make great decisions on profit taking. And you're going to understand where the market is likely to stop. These are what we call termination conditions. And termination conditions don't sneak up on you. They don't jump out of the bushes and frighten you, guys. Termination conditions are there. They are visible. You will learn to respect them and embrace the 90%. The path has been consistent. For the 20 years Nexgen has been teaching people to read indicators, to learn to day trade, guys. Learn the rules. Start with the rules. It's only 3 rules, guys. And once you learn the rules, you can recognize advantages. Once you can recognize advantages, you can turn those advantages into a trade. Everybody can simulate. There's no pressure, I hope, from anybody to go live, to put real money on the line before you're comfortable with the methodology. And the step-by-step path to becoming a confident trader, ASAFP, guys, post those trades in the room. Every time you take a trade, post it in the room. Say, hey, Mark, this is how I read my indicators. Did I read it right? We'll talk about it. If there's something that could use fixing, we'll fix it. If it's perfect, we'll call it perfect. We'll high five. But the goal is that as you begin with this software, you focus on trading the correct rules, because the rules that I'm about to hand you are for one pattern that you can prove wins more than it loses. That's it. It's a simple pattern. It repeats itself daily, and you can prove that it wins more than it loses. So you're going to develop trust. The goal is to not get simulator lucky. Hey, what's up, Papa Giorgio? Um, Simulator millionaires, live market paupers, right? We've all been there, where we get a couple lucky trades and the dopamine says, man, go put your wife's new car fund in the market. You're a genius. And it turns out you weren't following any rules. You just got a little lucky. We're trying to avoid that. Trying not to practice the wrong trades, guys. Trying to focus on following the rules and then keeping it simple. When I say it's a pattern, I can't stress this enough. Your high probability trend trade, whether it is TradingView or whether it is NinjaTrader, is a pattern. Hey, what's going on, Chariot? Good to see you. Learn what that pattern looks like. What does it look like to have the perfect entry? What does it look like to have those advantages in place? And then it's easier to commit to that advantage. Learn the looks so they're easy. And that's repetition, guys. Repetition creates recognition. The second step to becoming a confident trader, ASAP, is using the tracking sheet, guys. I give you one. I made a generic one for you guys that don't want all the pictures of all the other stuff. Take a picture of your trade. How did you do? Did you follow your rules? What was the feedback from class? Pretty simple, right? How to annotate for TradingView, how to annotate for NinjaTrader right there for you. And then then you can start yours right below it. Let me give you that. That's the most basic, right? That is the most basic. For both platforms, I'm also going to give you, for TradingView, what it looks like to have that high probability trend trade, a second trade that you'll be able to add, ideas on management, termination conditions, a place for you to put your pictures to build your plan, and then also a trade tracking sheet if you want to keep it all together. I'm going to hand you that, and I'm also going to give you the Nexgen, the TradingView one, which has your basic rules, about 400 pictures of the pattern, a place to build your plan, and a trade tracking sheet. The trade tracking sheet, guys, is important because the trade tracking sheet is how you're going to identify your thing. Every time you get feedback in the room, guys, good or bad, and I don't think there is bad feedback. I think there's constructive criticism. Learn how to accept it. It's a big part of it. But if you wake up every morning, and I mean every morning, and you go back and look at what you did yesterday, and you say to yourself, hey, yesterday, what worked, right? What did you guys do yesterday that was great? For me, it was having a clear path. When I had a clear path, it was effortless. And when I didn't, things didn't work out, right? So this morning, I'm focused on a clear path. I'm focused on making sure that I have room to profit targets, that there's nothing in my way that could stop the market. What didn't work is the exact same thing, not having a clear path. So I'm hyper-focused coming into the day saying, man, the only way you're going to get me in the market is if there is nothing in my way. Oops, excuse me, one second. By a sneeze. You're going to notice that the things that are working, when you're following your rules, when you're trading the plan, when you believe in the methodology, you're very relaxed, guys. And you start saying cocky things like, if they want my money, they're going to have to come get me because my stop is right where the market shouldn't go. And the things that you force, is anyone ever forced to trade and you start getting frantic with your targets and you start getting frantic with your stop placement because you know you're in the wrong trade and it feels forced, guys? You're going to start to recognize these things through the feedback. and you're going to recognize what your thing is. My thing was trading into areas as a new trader. Then my thing became early entries, and then my thing became late exits. And man, my thing has changed over the years, but every time I go back and study, I recognize it and I commit to fixing it. And guys, that's what the room does for you, is the room gives you the ability to get that feedback. When you don't see your own thing, I'll begin to see the patterns. I'll begin to see your fights. I'll begin to see your mistakes. And my promise is that we'll work together to fix them. So learn the rules, simulate, practice, commit them to memory, and more importantly, build trust in them. And then just keep it simple, guys. Keep it simple, keep it focused. I'm also going to drop right now, and I've already dropped them, but I'm going to do it again. The KISS plan and for TradingView and the KISS plan for NinjaTrader, guys. And these are very simple plans for both platforms designed to optimize your chances of success. They focus on learning one trade and one trade well. And from that trade, you begin to see more trades, open some doors, see more opportunities. So we're going to start with NinjaTrader and NinjaTrader high probability trend trade. A trade that you will be able to prove if you do the work wins more than it loses, typically 70 to 80% of the time. It's only 3 rules. When a rule is met, you have an advantage. So the first rule says that the large chart needs strong trigger lines. Well, when that rule is true, I have the advantage of momentum. When there's nothing in the way that could stop the market, I have a clear path. And once these 2 rules are in play, I'll go define an entry area. That's it. There's not tons of verbiage. There's not 72 indicators. Guys, it is momentum plus path plus entry. That's the recipe for greatness. It only takes 2 charts to figure this out. Even more importantly, guys, remember, simple is always better. On your large chart, your big chart, the chart to the left, it's so slow. It's hard to see change. It takes 1 bar. That's it. It takes 1 bar. Good morning, Miss Anna B. Nice to see you in here. And you'll be able to define the direction of the market. You'll be able to define the momentum in the market. Rule number 1, you'll be able to define the areas in the market using the most current printing bar on your large chart. That's it. Rules 1 and 2 are found from this bar. Rules 1 and 2 must be met before you go to the small chart, the faster chart, the refinement chart, the entry chart. That's what we're going to call it, all the things, guys. And this entry chart shows from the bottom of the bar to the top of the bar on the large chart. And in the perfect trend trade, there is a retracement, a bounce from an area inside of triggers, and continuation. And while your small chart looks like it's changed direction, your large chart won't blink, guys. It's this refinement process that allows you to reduce risk dramatically. And it's this refinement process that helps you get the absolute most out of your trades. So it's only 3 rules and it's only 2 charts. And it's 2 charts because I really like to give you guys this reminder. You're not in charge. The market doesn't know you exist. They don't care about you. You're not getting a Christmas card from the NASDAQ, guys. Who are you trading with and who are you trading against? Well, your rules are designed to keep you in line with the large crowd. The large crowd defines direction. It goes whichever way they want it to go. The large crowd reacts at key areas. They could reverse the market. You know where it's at. You know where the reaction is most likely to come from. You can choose not to trade into it. Wait for the reaction. Guys, the large crowd wins. That's the easiest way to say it. Your small chart are the fighters. These are the people that have no problem fighting the trend. These are the people that have absolutely no issues pushing down when everything says up. And the market, I need to work this in here. Whoops, that's not it. There it is. The market only goes up and down. That's it. So there's only 3 things that you could ever do in the market. You could buy when it's going up. You could sell when it's going down. Or you can just wait if it's not perfect, guys. And when trends are established by the large crowd, there's always a fight. Always a fight. That's your small crowd. We rely on their fight. We pinpoint where they're most likely to fail. That becomes your entry. You know what? If you change your name to Fibonacci, Ron, the market would just constantly smash into you. It would seek you out. That would get annoying. Hard to sit on the beach with price always reaching you. Guys, big crowd wins. Small crowd loses more often than they don't. You'll be getting in right where their failure is most imminent. You got a wife for that. All right, NinjaTrader users. We're going to talk indicators real quick. These are horizontal lines on a chart. You will see them on the large chart. You will see them on the small chart. There is a divergence high. This is a magenta line, and it prints if there's a loss of momentum at a pivot. What that means is that your buyers are in control. Everything is going up, and at this exact moment, the buyers either jump ship or the sellers take over, push the market down. That magenta line says, hey, you're losing momentum. Hey, there was a momentum loss. Here's the line in the sand. You can see exactly where it happened. You'll see it as a cyan line from a low. If you're not color savvy and you remember the 80s, it's hot pink and baby blue. You're going to see Fibonacci resistance, guys. These are red lines built upon thousands of calculations. When the market is moving up, this is an area that creates bounces and reversals and just unpredictable action. These are where tops typically come from. Fibonacci support, these are where bottoms typically come from. They can create a bounce, a reversal, they can break. And then you're going to see yellow 1-to-1s. So anytime in this room, if you hear me reference areas, we're referencing one of these lines. If the market is in an uptrend, a magenta high, resistance, and yellow 1-to-1s all fall under the blanket of resistance, an area that could stop an uptrend. If the market is trending down, divergence low, Fibonacci support, yellow 1-to-1s. These are all areas that fall under the blanket of support. They could stop the market. They could create a bounce. You don't have to know how they're created. Just know that horizontal lines are bounce points. We're also going to use triggers. There's only two sets. There's small triggers. These are solid lines. These are a fast-moving average. And there's large triggers. These are slow-moving average. They're dashed. Solid, dashed, small, large. When your triggers are green, they're going up. When your triggers are red, they're going down. The same is true of the background. When the background is green, the market is going up. When the background is red, the market is going down. So trigger lines are going to define trend. Trigger lines are going to define momentum. Trigger lines are going to define termination conditions. Trigger lines are going to define entries, guys. These will show up in everything you do. The only thing you need to know is that these are small and these are large. And now we're going to break down 3 rules using those indicators so that you can learn a trade that you'll be able to prove wins more than it loses, a trade that's going to create confidence through the memory of success, guys, a trade that gives you an edge so that the probabilities are in your favor. So we're going to start on the large chart, and we are going to demand that it has strong trigger lines because the first advantage is momentum, and then we have to have it to look for rule number 2. So when the background is green, we're in an uptrend. The only way I can have strong triggers is if my small are above my large, if the colors match, and if there is space between the two. This look right here is your strong trigger look. And in a live market, watch this. It's going to look just like that. And if it's a lot of space, or if it's a little space, strong triggers is always strong triggers. It has nothing to do with these bars. It has nothing to do with the areas. All it is a separation between the small and large on the first bar printing. In a downtrend, small and large must be red. There must be space, and then we can just do it one more time. In a live market, it's going to look exactly like this. Your most current bar. Smalls will be below the large. Space between the two. Has nothing to do with the price bars or any Fibonacci areas. Are you guys good with that? Pretty simple, right? Separation is strength. This is the easiest lesson that you'll ever learn. Well, if separation is strength, if your most current bar, the small triggers are back inside of the large triggers, there's no longer separation. We call this weakness, which very conveniently is the opposite of strength. When I have strength, the odds are favorable for the market to continue in the direction of the trend. When I have strength, this is the look that is typically needed to break those key Fibonacci areas. When I have strength, it's even going to allow me to adjust my plan a little bit and maybe take some chances that I wouldn't take as a brand new user. When I have weakness, anything can happen. That doesn't inspire confidence. This is where the market tends to reverse from the middle of nowhere. This is where those key Fibonacci areas are more likely to hold and potentially reverse the market. So it's either strong or it's weak. And the only way I will ever look for rule number 2 to be true is if I have the advantage of momentum as a new user. I'm being very black and white, very if-then. If I have strong triggers, then I'll look for no termination conditions. Well, what's a termination condition, guys? It's just an area that could stop the market. If it is resistance, yellow 1-to-1s, divergence highs, those are areas that could stop an uptrend. If it is support, yellow 1-to-1s, divergence lows, those are areas that could stop a downtrend. So these are the areas where the large crowd is most likely to make decisions, where the people that move the market are most likely to make decisions. And I'm going to go back to this picture one more time because I really want you guys to see this. Where did I put it? I left it in the room. My bad. This was 1 minute and 44 seconds during news. Do me a favor and give me a Y if you see how often the market respects Fibonacci. They know that it's there. They react at it. They reverse at it. They bounce from it. Guys, this is where the people in charge are making decisions. All you have to do is let them get there. So when price, your dynamic Renko bars reach a line, we're done with price. Once price gets there, that's it. Price is over. We're going to let the trigger lines tell the story, guys. If none of your triggers have gotten above the area of resistance, that area of resistance is a termination condition. And this is what could happen at a termination condition. It could reverse. It could create a big ugly bounce before it continues, or it could break. And the reality is, guys, I have no idea which one it's going to be. I don't know if it's going to break or hold, if it's going to reverse. I don't know. I don't have to know. If price reaches resistance and my triggers remain below, absolutely no trades into the area. Getting elevator music. Hold on. Hopefully he can see that. One second, guys. We'll see if we can get Papa Giorgio going here. So guys, price reaches, no triggers, no trade. Don't waste your time. Don't waste your effort. 60% of the time, they work every time, guys. And that means that you don't have an advantage. You don't have an edge. Is everybody good with that? So if I go to the large chart and price reaches yellow 1-to-1s and none of the triggers break, no short trades. The same way when price reached resistance and none of the triggers got above, absolutely no long trades. Do you guys see it? No long trades, no short trades, over and over, guys. So we're developing trust. We're developing trust in the idea that these areas can stop the market. We're developing trust in the idea that I don't have to trade into an area to reach my goals. These areas break all day long, typically with momentum. So there's a life cycle as you go through it. Sellers are in control, the market is pushing down, the momentum is overwhelming, and price reaches Fibonacci support. When it reaches Fibonacci support, 21 people in this room say, where are my triggers? Small and large remain above support. Guys, this is a termination. I won't initiate a trade into this area. I won't take a trade hoping that it breaks. Now, if I'm already in a trade, I may see if a runner breaks, but no new trades into the area. Wait for the reaction. If it's going to break, your trigger lines will tell the story. And when two triggers smash through the area, let me see. I need to get him so he can hear. You do have sound. Can you guys hear me? Give me a Y if you guys can hear me. Okay. Use your... All right, we'll see if that helps him out. I called in the cavalry too. Guys, if your small triggers absolutely smash through... Oh, awesome. Good stuff. Good to have you back. You betcha. Absolutely smash through the area with momentum. This area has the potential to break. This is the second trade in the plan that I gave you. It's called a 50-50. 50% of your triggers are through, 50% are not. Guys, this is a trade that you can take that gives the potential of the area to break, but it's just potential. An area is not broken until all four trigger lines exceed the line of support. When this happens, your path is clear. When this happens, support conveniently becomes resistance. And that is not uncommon for them to retest that area. And your path remains clear until you reach the next area. And once you reach the next area, you go back to rule number one. You go back to price reaches, no triggers, wait for the reaction. In an uptrend, it's the same thing. And I love this. Look where the market came from. Price reached Fibonacci support. None of the triggers broke. And sure enough, it reverses the market. Strong bottom. Price reaches Fibonacci resistance. All of the triggers remain below. Guys, it's only a moment. Wait for the reaction. No trades into the area. If two triggers smash through, all the momentum, guys, it's got the potential. Four triggers, it's a clear path. Resistance becomes support. As this is a recipe that is tried and true. And remember that trading is about advantages. Does everybody see how price made it? Excuse me. Right down to those one-to-ones. It's not a coincidence that there is a reaction. Price broke support, clear path, comes back and retested as resistance. Do you guys see it? Price breaks support, gets retested as resistance. Price breaks support, gets retested as resistance. Oh my gosh. It's almost like we can predict what the market is going to do. Using the idea of momentum, there is none, deeper retracement, using the idea of termination conditions, where the market is most likely to bounce. Are you guys with me? It's okay to wait. You know why? Because the futures markets trades billions, guys. Billions. It takes $400 a day to be a six-figure trader. That's it. 400. You don't have to trade into areas. You don't have to trade without momentum. You don't have to be the first one in. Hey, Rob, good to see you, man. You don't have to be the last one out. Guys, all you have to do is find the easy trades. Find the trades that already have an advantage of momentum, where the large crowd has told you, hey, we want to go this direction, and we want to go that direction fast. And then wait until they tell you there's nothing in our way and we got a long way to trouble. And then once you have those two, your entry is so freaking rock star. It's like a sniper. So much so that you're going to use a limit order. You will wait for the market to come to you. And there's a very, very distinct phrase that I want you guys to learn. And I'm going to drop this in the room. And I'm just going to tell you right now, if you printed this out and learned this phrase in orange, you would never miss an entry. If your rules are in play and you learn this phrase, you will know exactly where your trades come from long before the market gets there. We're learning to trust it, guys. You're going to use a limit order to buy or sell a pullback. What's a pullback? Well, I'm glad you asked. A pullback is that little fight by the small crowd. Large crowd says up. Large crowd says strong. Large crowd says clear. These yahoos show up and push it down. Thank goodness. We are going to buy or sell their pullback at an area, at a fib, at a mid band, at a yellow 1-to-1. You're killing me, Victor. Victor says, I live by that. Well, sometimes 78%, maybe 70. Okay, 60. Guys, you're gonna use an area on the small chart, because on the small chart, these areas create bounces the same way they do on the large chart. But here's the most important part. You're going to buy or sell a pullback, which means you're going to be patient. You're going to do it in an area, which means you're going to give it a springboard to ricochet and go in the direction of the large crowd. But that area needs to be inside of triggers. This is the most important phrase, or the most important part of what I'm telling you. Inside of triggers, because large triggers on your small chart show you where the retracement, the fight, the push is most likely to go. It's a cool concept called regression of the mean, which you don't have to know. I didn't know it. I was an English lit major. That's a lot of big words. But what it means is that price returns to the average. Your large triggers are the average. They show you exactly where the retracement is most likely to go. But trigger lines aren't bouncy. It takes a fib, a midband, a yellow 1-to-1 in that zone. And guys, this is where the magic of rule number 3 comes into play. The tighter these triggers are, the smaller the retracement zone becomes. The least amount of risk you're going to have on a trade, the highest level of accuracy for entry. And it's just a pattern. That's all it is. So when the large chart says up, and then you look and the large chart has strong triggers, so the odds are favorable for the large chart to continue up, and the large chart has no termination conditions, which means that there is absolutely nothing in the way on the large chart to create a bounce. Hold on, I want you to see it. When the large chart is perfect, we're going to go pinpoint our entry, guys. And it begins with the reversal bar. The reversal bar is the beginning of the pullback. It's the start of the fight. It is not your entry. If you get in at the reversal bar, you're probably going to get run over more often than not. You can know exactly where the fight is most likely to go by looking from the highest point of the large triggers to the lowest point of the large triggers. And yes, there are 2 sets of large triggers on your small chart. One's from the small chart, one's from the big chart. Guys, it's all about accuracy. The market is most likely to retrace somewhere between the top and bottom of those lines. That's the retracement zone. But trigger lines aren't bouncy. We need fibs, midbands, or yellow 1-to-1s in that zone. That shaded blue box represents the point. It's a window because there's multiple areas, a window of opportunity, if you will. From the highest point of support to the lowest point of support inside of triggers. This is where the small crowd is most likely to fail, where the market is most likely to bounce and continue with the large chart. Your entry will be just above the highest point of support because the large chart is screaming with absolutely nothing in the way. We're not going to trip over a couple pennies trying to save dollars, guys. Pull back to the area inside of triggers, and there it is. And the cool thing is because you've identified where the retracement is most likely to go, because you understand through a little bit of study where the market is most likely to bounce, you're going to realize that your advantage is gone once you get below these triggers. Guys, and any line, any fib, any midband, any yellow 1-to-1 on the wrong side of the triggers, below the triggers in a long trade, this is where the market should not go. And I want you to remember that phrase, where the market should not go. If this is going to be part of your 70 to 80%, it shouldn't make it that far. This is where your initial stops are going to be placed, guys. This is where you'll cut ties with a trade if they're not doing what they do more often than they don't. So reversal bar, define the retracement, identify the bounce points, get that limit order, and then just sit on your hands. You've done all you can do. Does that make sense? Anything, any line below, not a part of your window. Did you newer users know that you can make money long and short in the futures markets? Whether it goes up or down, we just don't care. When the large chart says down, let's do pictures again, right? When the large chart, where's my 2-chart picture? Ah, there it is. When the large chart, let's say it one more time, just for effect, says down, when it's telling me that there's absolutely nothing in the way, it's trading all the way down here at 62.94. I'm waiting for the reversal bar. The reversal bar says the fight is on. Where's the fight going? Somewhere from the bottom to the top of the triggers. I don't know where, but it's in that range. That's where it's most likely to go. Where's it most likely to bounce? From an area inside of triggers. And I'm telling you guys, learn the phrase, buy or sell a pullback at an area inside of triggers. You will never miss your perfect entry. And by defining where the market is most likely to continue, you have defined where the market should not go. Any lines beyond the triggers, above the triggers in a short trade, are where the market should not go. Your initial stops are placed where the market should not go. Generally, 4 to 5 ticks beyond trigger lines. There we go. If I take the perfect short, if it gets beyond those trigger lines, I jump ship. I don't want it. My advantage is gone. I would rather take the loss than hope that the market reverses magically for me. If I'm in the perfect long, I know exactly where my advantage is gone. And guys, it's not uncommon to see you say, well, I'll just put it below that mid band. I'll put it below this fib and lose $700, $800, $900 on a trade where you could have been out for 2. Guys, getting your stop hit is a cost of doing business. Getting your stop hit is going to happen 20 to 30% of the time in high probability trend trades. Losses are not detrimental to success, but you can take the correct losses by following the simple plan, by having momentum, by insisting on the clear path, by entering where the market is most likely to continue and being willing to cut ties if it gets to where it shouldn't go. And all you have to do is learn this pattern. When I have momentum, if there is at least the potential to break, I'll buy a pullback at an area inside of triggers. Things that absolutely torture new users. But there was one of those losses of momentum. Guys, if your path is clear, it takes 3 momentums in the same, or 3 divergences in the same price range to keep you out of a high probability trend trade. Some of you will say, but Mark, the small triggers turned against me. I have to remind you, momentum is defined on the large chart. Once this says look for an entry, your only focus is an area inside of triggers. You can study this. You can start to build faith and trust in this, guys. Go back on your large chart. When you see the rules met, circle that tail. We don't trade the tails. That tail lets you see the low end of that bar, which should be a pullback to an area inside of triggers. That happened on the 6th of November. That momentum, potential to break, pull back to an area inside of triggers, happened in 2021. That momentum, potential to break, pull back to an area inside of triggers, is from 2022. Guys, these are patterns that have been repeating themselves for as long as I can remember. These are patterns that you can prove win more than they lose. These are patterns that are so stinking repeatable that even back in 2004, we were teaching trend trades, pulling back to a mid-band, going with the trend, finding the bounce point. That's from 2004. And that look right there is what we're about to talk about on TradingView. Are there any questions about the high probability trend trade? Pretty basic, right? It's only 3 rules. 3 rules, 2 charts, no opinions, no hoping, wishing, wanting, just following the pattern, guys. You won't know it on day 1. I'm going to tell you this right now. You won't be able to call a trade on day 1. How could you? You're brand new. By day 2, the language is going to start to sound a little familiar. By day 3, you're going to be able to understand it when I say strong triggers, when we talk about areas, when we start pinpointing entries. And this feeling goes away right around day 3. So from day 3 on, when the language becomes a little more evident, that's when you start focusing on the patterns, guys. By day 5 or 6, most people can at least see the pattern. Most people can at least go, all right, I know my trade's somewhere in here, whether you trust it or not. The goal is to build that foundation to grow a little bit every day. All right, TradingView. Let's talk TradingView, guys. No questions on NinjaTrader? We're shifting gears. If you're a TradingView user, this is your moment. TradingView indicators are very similar, guys. There are one-to-ones, mid-bands, divergence highs, divergence lows. The biggest difference is zones, and there's 2 sets of zones, or 2 ways people are using support and resistance, because we don't have Fibonacci, not yet. Let me see if I can find it real quick. I have no idea where it is. Never mind. These zones, think of them as fibs, support and resistance. Don't trade into them. Trade from them. It's only 2 charts again. There is a 15-minute chart. This is a big, slow chart. Guys, I want you to think about what you can get done in 15 minutes. This is a glacier of a chart. We'll use it to define direction. We'll use it to define momentum. We'll use it to define key targets. That's it. That's how we're going to use this large chart. Your small chart is the 1-minute chart. And we're going to use it to define the immediate strength of the market using the small triggers. And we're going to use it to define entry points. Very similar to, to TradingView. Or to NinjaTrader, sorry. I just had a total brain fart, but that's okay. That happens sometimes. I'm trying to find the PowerPoint that I built for TradingView because I think it's got some good stuff in it. Sorry guys, having a moment. Having a moment. I swear I had a couple PowerPoints and I don't know where they went. That's okay. 2 charts. Let's read the large chart. Having a senior moment. Large chart direction. And you know what? I'm gonna simplify this a little bit. We're only gonna talk about entry. What it takes to go look for an entry. So I'm gonna take all of this out, all of this confusion. You will define direction using the small triggers. It's either up or down. You will define room to targets by making sure you have room to targets, guys. If you're up against a line, you don't have room. If you've got room to get to trouble, you have room. What is room? Well, room has a different meaning to everybody. Me personally, if I can't make at least $100 on the trade before I have to start thinking about management, I choose to sit out. That's me. That's my personal. Some of you, we talked about it yesterday, demand $200. Some of you demand $30. I don't tell you what's right or wrong. I don't tell you what's good for you. You've got to pick your number. That's my number if you need a starting point. I can manage aggressively and assertively because I can read charts fast. 100 gives me that reaction time. I think the average new user probably needs more like 200. And that's okay. So direction is either up or down. Room to targets means that from wherever I enter that market, I've got room to make money. Is everybody good with that? That's really all there is to reading a large chart. My triggers are down. I've got very little room to trouble. I've got absolutely no room to trouble. Do you guys see it? That's your large chart. Down, no room, F it. Why am I looking for a trade? There's nowhere to make any money. You guys comfortable with that? Because that's your first two rules. That your 15-minute chart is not trading into areas. Areas can be one-to-ones. Areas can be a mid-band, outer band, zones, divergence highs, divergence lows. Guys, if it's a horizontal line on your large chart, give yourself room. Thank you, Ron. Red news in 1 minute. Your 1 minute chart, not trading directly into areas. Again, one-to-ones, mid-bands, outer bands, zones. They do not, Papa, are you working on that archaic, have the large triggers look? I'm trying to get everybody on this one. So there's my workspace. It is so stinking slow that the large triggers are a distraction, guys. The large triggers will paint the background different colors. The large triggers are so stinking slow. It's like continental drift, right? It's like, oh my gosh, Africa is screaming towards me. It'll be here in a million years. Small triggers are all you need on a large chart. On your small chart, we can use the large triggers. But on your large chart, small's it, man. Let's keep it simple. I don't need background colors. I don't need large triggers. I need up or down, and I need room. That's it. And if I have room on the 15-minute, I can go look on the 1 minute. I can start looking for entries. And if I have room on the 1 minute, then I can definitely look for my entry, guys. And the language is going to sound familiar. Buy or sell a pullback, right? Everything that Nexgen has always done has revolved around and embraced the little fights that happen when a trend is established. So I'm going to buy or sell a pullback, that fight, at an area, at a zone, at a one-to-one, at a mid-band. But here's the difference. When I get to my area, so the large chart says up, the large chart has room to target, so important. The small chart from my entry point has room to target. Guys, you're not entering at the area. So if you are a NinjaTrader convert, you are not waiting with a limit order at the area. Your entry is an up bar that finishes, that closes above the small triggers, because the weak side of triggers, which is exactly what this is where reversals come from. And we want the small chart to reverse into the direction of the large chart. So it's all the patience. And guys, you've got 1, 2, 3, 4, 5, 6 minutes to think about your perfect entry. Once this bar closes, you're in the long move. Small triggers are down. There's room to trouble. Because the small triggers on my small chart roll up, guys, I have got to wait for the pullback to an area. But my entry is a reversal bar, a down bar that finishes below the small triggers, because that's where reversals come from, the weak side of triggers. And sure enough, off it goes in the direction of the large chart advantages. Guys, the trading view trend trade is quick to learn. The trading view trend trade is frustrating for most users because it means that you have to sit on your hands, that you have to do nothing, that you've got to be patient. Those are up. There's your pullback. There's your close on the correct side of the small triggers. There's the market going up with it. Everything we just talked about. Pretty cool, right? So the goal is that you start to focus on entries, guys. If you are in NinjaTrader, you are focused on momentum, potential to break, pull back to an area inside of triggers. That's the recipe for a trade. That is the absolute perfect trade. If you are on TradingView, you are focused on direction and room to targets and pulling back to an area with a close on the small side of the triggers. That's your pattern. That's it. We're looking at advantages, guys. And once you take your entry, once you've entered the market, you've got to manage it. And management is the second piece of the puzzle. And management is where good things happen, guys. So on the KISS plan, where is it? Let me pull it up real quick. We're going to talk about NinjaTrader management real quick. The KISS plan for NinjaTrader, guys, and TradingView is stepping stones in your learning journey. These plans that I give you each and every day, these plans that we talk about the basics each and every day, guys, these are designed to optimize your chances of success. They're designed to teach you to read your indicators. They're designed to give you the highest chance of winning as a brand new user with the fewest moving parts. It's only 2 charts, it tells you. It tells you exactly where your rules are met, and it gives you a checklist for entry. Great entries create manageable trades. So now if I go to that spreadsheet that I gave you right here in management, I'm going to show you the KISS plan management. If I enter a high probability trend trade, and it's all if then, if I enter 2 ticks below the lowest point of resistance, the perfect entry where the market is most likely to continue, then my initial stop is 4 to 5 ticks beyond the triggers where the market should not go. Now guys, if you enter at 34, this is crude oil, and your stop is at 49, you have $150 per contract worth of risk. This is going to make some of you pucker. I know it's going to make you pucker. If you say, I can't risk that much, and you put your stop below an area inside of triggers, you can't be surprised when they hit it and drop. If you say, well, I'll put it above the areas but still in the retracement zone, we saw this yesterday, you can't be surprised if they hit it and they stop and they drop. Guys, your stop is where the market shouldn't go if this is going to be one of those winners. You'll know your risk before you ever enter the market. You have to accept that risk before you ever enter the market. If you do not accept that risk, it might be better to just not take the trade. Your targets are preset, $100 and $200, guys. You're learning how to enter. You're learning where the market shouldn't go, and most importantly, you're learning how to get paid. If they don't hit your stop, you'll get a reversal bar in the direction of your trade. This reversal bar is redefining where the market shouldn't go. And I want you to think about what a trend trade is. A trend trade is the sellers completely in control on the large chart. The retracement is the buyers doing everything in their power to overtake the sellers. This is their point of failure. The buyers have failed. That's your new point, where the market shouldn't go. If they regroup and come back, they're going to hit you. They're going to hit you for a tiny little loss. You only have $30 of risk on that trade. Sometimes you might even have to take a trade twice. Guys, this is the most basic way to manage. You're either going to get stopped out or it's going to go to your first target. So if it goes to your first target, you win. You're a winner. You are happy. Your palms stop sweating. That pleat that you sucked into your seat starts to relax, guys. One contract is off. They can't take that from you. That's $100 in your pocket. And now your new stop is break even. And I want everybody to notice, I believe language is important. I didn't say where the market shouldn't go. Your break-even stop is reminding you that the only reason you ever entered this trade in the first place was because you had odds favorable momentum and you had a 100% clear path. And this is a market that's going to be difficult to stop before it reaches something solid. That's why you're break-even, not because it's the best stop, the stop that isn't likely to get hit, because you're developing courage to hold for the second target. It's only $200 away from your perfect entry, guys. And if they get there, that's a $300 trade. That is a $300 trade, guys, over the course of a couple minutes. Do it twice. You're deep into six figures. The goal is that you can take the best trades. You can manage it. You can get paid. You can wait for the next trade, guys. That's what I teach each and every day. And then I give the magic phrase, you will craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, you'll change your plan up. But until you can do this, page 1 of the Ninja Trader KISS plan, there's just no reason to break out. Learn how to get paid and then learn how to get paid more. Now, when we talk TradingView, your management gets set up a little bit differently. So the large chart defines direction and room to targets. You're going to use this concept to set up for management. And it's not hard. You just have to remember 3 things, guys. When the market is up, there it is. When there's room to targets, the most current price is going to be somewhere in relationship to the small triggers that are up. It's either going to be left of the triggers, it's going to be right of the triggers, or it's going to be right inside of the triggers. Now, if you are left of the triggers, you're on what we call the strong side. The strong side is where bigger moves tend to happen. The strong side is when 1-minute areas are most likely to break. It does not give you carte blanche to trade directly into them and break your rules. But if you've got some room, they might break. They're most likely to. Now, if you're on the right side of the triggers, above them in a downtrend, below them in an uptrend, this is where reversals happen. It doesn't mean that it's a lower probability scenario. You're still looking for long trades, but when you get to a 1-minute area, GTFO, take the money, get out. It is more likely to produce a trade-ending bounce than it is not. So you know to manage assertively. If you are inside of the triggers, that's transition. This is where I like to split targets. From the transition, I might take half of my contract off on the way to the large chart trouble, maybe at a 1-minute area, get to break even, and see if we can't make the next area. This is your management plan for the KISS plan. This is what tells you how you're going to need to manage. This is probably the concept that's going to help you grow outside of the very basic plan. So every trade has management. Triggers are up, strong side of the triggers, no room to trouble. Do you guys see it? There's trouble as well. There's just no reason to take the trade. I can't find one. What market is this? This is crude oil. 3 triggers through with momentum. This area's got the potential to break. We'll see what happens. Guys, that's my first hour. My first hour is the same hour every day. My first hour is as basic as I know how to make it. One of the things that I find new users really have difficulty with is sitting still, is watching a market move and not being a part of the move, guys. The fear of being left out. I want you to remember, the futures markets trade billions. Find your 4 to 500, crash your Ninja Trader so that everyone in the room wonders what happens. And guys, keep it simple. Keep it focused. Keep it high probability. Give yourself the highest chance of success. And then you will find more ways. The high probability trend trades are not your only trades. They are your highest probability trades, your best chance of success. They are the trades that teach you to recognize all the other opportunities this software provides. So I'm going to walk away. When I come back, we're going to do two things. We are going to look at the charts that have been posted, because feedback is a big part of what we do in this room. When I do it, I am not the trade police. It's important that you understand that, guys. Your wins and losses don't affect my quality of life. I prefer it when you win, but my job is to teach you to read indicators. My job is to help you find the best of the best. So what I ask of you, I will, Wayne, what I ask of you is that if you post a Ninja Trader chart, you talk about the momentum, you talk about the path, you talk about the entry, and I'm going to help you if your chart read is wrong. If you post a trading view, you talk about the direction, you talk about room to targets, talk about how you're going to manage it. Define your entry. And what you're doing is you're writing a recipe for success. You are writing a recipe that says, when I have this pattern, I win more than I lose. When I have this pattern, I have the ability to do great things, to have a higher chance of success. Wayne, there was one more, right? All right. So let's look at Wayne's charts, and this is how the feedback's going to go. Wayne's got to go build hot rods. Oh, thanks, man. You got them. Cool. So the trend is up. It's in transition, and there's room to targets. Wayne takes the first entry above the small triggers from the area, gets out at trouble. Absolutely beautiful. That was a trend trade. Guys, when you take these trend trades, don't be afraid to show me the pullback. And then price breaks away. You can see the space. It pulls back to support. And Wayne, you try to get in on the way up. Just doesn't work. Just doesn't work. Never gets above those small triggers there. That's one of the red flags. And you get out. And then it pulls back. Never really breaks away. There's your close above. Makes it to trouble. Oh, touched but didn't fill. And then they get you for a small loss. So this looks like the perfect trend trade. Easy money. This is a momentum trade, if anything, that failed. And your entry makes sense. It just didn't work. That's it. It's good luck. Didn't work. And then there's your next support remains support. There's your entry. It touches, doesn't fill. And that's where you have to make those decisions, Wayne. I'm always torn. If it touches my target and doesn't fill, I'm so inclined to just close my position because it's already gotten where it's supposed to go. But there's the little part of me, and I hate to admit this in front of a crowd of people, that there's the little devil on my shoulder that says, man, they're probably going to go back and fill it. Just sit tight. And this happens more than it doesn't. So you have to make your own decision on that. I'm getting to the point, Wayne, where if it touches and doesn't fill, I just hit close. I give up the 5 or 6 ticks, and then I'll just wait for the next trade because I keep getting burnt on these minute bars. So great trading on that one. Awesome trend trade, momentum trade that didn't work, and then just couldn't get filled. Let's do this one. Trend is up, transition side, room to trouble. Coming back, you're above. into all of the trouble, but the zone wasn't there. So you're just hoping that it breaks, right? Man, I sure hope it breaks. That's all it is. Trading directly into a VWAP, that's a huge termination condition. Nothing's gotten above it. Pulls back to the one-to-ones, and you're saying, well, that's a momentum look from the one-to-ones. Let's see if we can break the VWAP. And it does, and it goes right to trouble. Nicely done. Did you see the VWAP as a potential spot for everything to go wrong? That would be my only question. Did you recognize that white line? Cool. So you were ready to manage. That's it. I love it. Perfect. And that's it. Guys, you'll get to the point where you're like, I see it. I'll take it. I'll manage. I can go super low risk into it. But until you get to that point, it's usually easier just to do things the easy way. Momentum with trend, easy winner. Momentum with trend, winner. Momentum with trend, winner. Momentum with trend, good loss. I love that. Perfect trade didn't work. Momentum with trend, winner. Momentum with trend, winner. Momentum with trend, good loss. Trend trade with poor stop placement. There's his lesson, highlighted in yellow. Going back, doing the self-analysis. Momentum with trend 3 more times, 3 more winners. Guys, if you're skipping this, if you're skipping the self-analysis, what is working for me? What's not working for me? You're hurting yourself. Wayne, this is perfect, man. Great trading, good losses, awesome stop placement, right? Good lessons. Wake up tomorrow, let's do it again. Great work, man. Thank you for posting those. All right, guys. The S&P has all the momentum. Only 2 triggers through, which means it's just the potential to break. I'll leave you guys with it. I'll be back in 5. We'll see what happens. If you have charts, post them. If you have questions, post them. The rest of the classroom belongs to you guys. I'm done with the lecture-y stuff. It's got to be discussion now. I'll be back in about 5 minutes. I'm back. So I'm going to scroll up to the top of the room, guys, and we're going to click on some of the pictures that were posted. Paul said, don't worry about mine because he split. We saw Wayne's 3. Let me get to the day, and then I'll be right there. Boom, 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 boom. Guys, you're going to notice that there are people, the same people, that post a lot. These are the same people that seem to be finding a pretty solid level of consistency. These are the people that are recognizing their mistakes. These are the people that are correcting their mistakes and moving forward. Guys, I'm telling you right now, I know it's difficult to post in the room. I know it's scary to post in the room. What if you're wrong? I want you to be wrong as a new user. I want you to make mistakes as a new user. Because if you never make mistakes, how are you going to learn to fix them? Right? If you don't make a mistake as a brand new user, how are you going to learn to fix them? And it's when you don't, when you take a loser and you just get mad, it's a loser, and you don't learn how to fix it, that's how you keep taking the same losers. There are lessons. Old tops. What's an old top? Strong. You're an old top. I might be too, Ed. I might be too. Gray hair. You know what? You still got hair, though. Good job. Good job. Not everybody's that lucky. Let's check it out. Joel got us going. He's doing some playback up here, it looks like. He's got a clear path. Not quite momentum. Pull back to the area inside of triggers. Catches it on the way down. Out of trouble. Great trade, Joel. Nice job using the basics. Victor, trend trade, triggers up, price in transition, manage to trouble areas on 1 minute chart, nothing but clear skies. Small chart, pulls back to the area, closes above, really late entry, right, Victor? Your entry was at 71. You finally get in at 76, which doesn't give you any room at all to trouble. And you pull one off. It breaks. So I am going to, Victor, just for grins, because I'm noticing patterns in people lately, you traded into an area. Now the question you have to ask yourself, if I say there's nothing but clear skies, but I trade into areas, am I being honest with myself? Or am I saying because it won, it's easy to annotate and say I did everything right? How often does trading into areas work out for you? That would be my question. Okay, so do you not have a rule number 2? If the large chart's good, you'll take it no matter what? I'm just asking. Because you may have changed your plan. No, I'm not trying to be right or wrong. Guys, you have to tell me what your rules are. If your rules are I will trade into a termination condition because the large chart is clear, just let me know. I'll never harass you for it. But if you trade right into it, I always go back to the very basic rules. And then I say something clever like you might have gotten lucky. A zone right at the outer band in transition, holy crap, there's a lot of reasons that could have bounced against you. And then I say, did you recognize it? Were you prepared to manage? That's it. That's all. I don't want to be right. I just want to help you guys read indicators. Trend trade, triggers up, price in transition, must manage on the 1 minute assertively, space to the next area. There's your close above, you get in, room to trouble, you get out. Nicely done. Nicely done. A lot less stressful with things not in the way. All right, Pete, strong bottom, momentum. You jump in, and it turns into the trend trade, and you get paid. Nicely done. Odds favorable momentum, room to trouble. You try the momentum style entry, turns into the trend trade. Well done, Pete. All the momentum. Pull back to the area inside of triggers. Market goes down. Pete gets paid. Potential to break. There's the first entry. Didn't quite catch it. Second entry works. Nicely done, Pete. Momentum and path, guys. At least momentum and the potential to break. And then sometimes there is no momentum. And sometimes there is no potential to break. And sometimes he just takes it anyway. Took the trade anyway. I love it. And gets out of trouble. Guys, I can't find rules met. Nothing but the entry rule. But it works out. Why? Because Pete says, and I'm going to go through. I'm not going to use my Pete voice because it's always way off. Pete says, I'm coming off of a termination. All of my indicators are down. I've got odds favorable momentum on my small chart. I've got a definable entry that gives me virtually no risk. I'm willing to take a chance to get to Fibonacci. That's all it is, right, Pete? Every indicator says down. I've got momentum. Let's see if we can retest the area. And they did. Nicely done. Same trade, 100%. This one has the potential to break. It's got a definable entry. Out at trouble. Out with a loss of momentum. Rinse and repeat. Same thing over and over. Momentum. It's getting below the trouble. Pulling back to it. Same trade, Pete. Same trade over and over. John and I were talking this morning, and we're like, you know, the one thing that I've noticed is the people that tend to win the most are the people that do the least. They're the people that trade their plan with conviction. They're the people that trade their plan without hesitation. They're the people that do the same thing. And Pete, you trade in determination conditions, right? But you do it the same way with the same conditions. Your plan's just grown. And you just do it again right there. So I pop, how do we feel about red candlesticks? Watch this. There we go. Couldn't care less about the candlesticks, Papa. Your large chart read. It's almost easy, right? The small triggers are up. From where the market is, I've got room to trouble. Does that make sense? Doesn't matter what color the bars are. It's a non-issue. They're too big and slow. What does that mean? That means from here, I would need a close on the correct side of the triggers. If I get one, maybe not enough room to justify the trade. My first sign of trouble is at 210. Does that make sense? If I take the colors off of the candles, it's the exact same chart read, isn't it? It's still up. It's still room to troubles. I still need a close on the correct side of the triggers at support. And it doesn't look like it's going to happen. That's one of the things that we do is we try to give value to everything. And not everything has value. Not everything is needed to take the highest probability trend trade. Sometimes you just need direction and nothing in the way. I hope that made sense. All the momentum. Pete lets it get below trouble. Gets paid on the momentum trade. When the momentum trade fails, it turns into a trend trade. He gets paid again. Did that make sense, Papa? I'm just going to call you Papa because there's a lot of syllables in there. And especially if you have a history of trading, it's kind of like not blaming your new girlfriend for the old girlfriend's problems, right? Maybe you needed those red candles in a previous life. This plan works without colors on candles, colors on backgrounds. It works without large triggers. That frustrates a lot of people. It's too simple, Mark. There's no way it can be that easy to make money. All the momentum. Pete takes the jump in. I love that you add in there, Pete, momentum trade, momentum entry with momentum. And then when it fails, it just pulls right back to the fib inside. And he goes, double up, baby, with this look. That's an entry too. Let's make all the money. Great job, Pete. You're killing it this morning. I think trend trade. I love it. I think trend trade. Triggers down. Price on the strong side. Space to the next area. After the first pullback, there's your pullback to the area. Triggers were still up and trouble up the way, so I waited until the triggers rolled. Price pulled back to the yellow 1-to-1s. Started going down, right? Your entry is 3 days later, Victor, right? And once again, just not much room to run. From 91 to 84, you've got 7 points. I like this look, though. Let's talk about it. And Victor, I'm going to give you something to think about. Are you here? Large chart says down. Large chart has room. Life is good, right? Let's go look for an entry, Victor. Price pushes down, pulls back with strong triggers. So what this is, Victor, is that is a momentum entry. It's on the KISS plan. With strong triggers, when price pulls back, you could actually, get over here, you could actually just sell the area, stop above, right? If you waited for the down bar right here, the whole idea of, and let me write it out because I don't know, I think writing it out makes it easier. The whole idea of waiting, ooh, that's super small font. Why is it doing this to me? There we go. These guys are killing me. I'm just going to close that. The whole reason that we wait for the close on the correct side of the triggers is so that we're not fighting that immediate momentum. Does that make sense, everybody? All of my traders. And I, Papa Giorgio, it's important to me, and you didn't respond, that the candle color doesn't matter. I want to make sure that that makes sense. Okay, cool. Was there a part that's not making it clear? If there is, let me know. So Victor, the idea is you get the break, you get the pullback, everything is down. If you're still in that trend trade mentality, can you be fighting triggers? Is it possible to fight triggers that are going in your direction? Not so much, right? It's a momentum style entry, but if you wait for the down bar, totally cool. Even if you're not below those triggers are already down in the direction of your trade. So you can't fight them. And that's kind of a next step, right? Pretty cool. But that's the whole idea behind why do we wait for a close on the weak side? Well, because that's where good things happen. But if they're already down, then you're good. They're already going. Everything's going your direction. You can get in off that area. I hope that made sense. Small chart, price pulls back, close below. You trade directly into trouble. It bounces up, and then it does ultimately go down. So you're like 4 for 4 trading directly into trouble. That's okay. Down, room, pull back to the area, close below. That was the easy one. That was the easy one. Going down. Make some money, call it a day. Love it. Good job. Pete, all the momentum. Get in before trouble. Get out before trouble. Get in after trouble. Get out at trouble. Get out at trouble. Large chart said down and potential to break. Pete does it in segments. I'll wait for the reaction. If there isn't one, I'll get back in. I'll wait for the reaction. If there isn't one, I'll hold. Go to the next one. Wait for the reaction. If there is one, I'll exit. Nicely done, Pete. Guys, remember that what we've done with the very basic approach is we're building this foundation. That is him on the ES, Boaz. Was the previous one? Yeah, that was ES as well. What we're doing is we're laying this foundation, right? We're laying the foundation to build our trading skyscraper. All the momentum. You jump in. When the momentum trade fails, it turns into the trend trade. Hit your add-on but didn't fill. And the market goes down. Rinse and repeat, right? Momentum and path. Momentum and path. There's momentum. No areas inside of triggers. Multiple divergences. Pete says, I'm going to get away with one here. I'm going to get away with one here. I don't have momentum. I don't have areas inside of triggers. I sure hope it goes up. And it did. LPTT. I don't know what that means. Low probability trend trade. Got it. But let me go back. When you do that, and you do that, and you do that, and you do that, and you do that, you got some money in the kitty, right? Pete's like, I'll give it $100 a contract because I'm already up $2,000. And with everything going up, I got a shot. 1,600. Great job. Momentum, potential to break, pull back to the area inside of triggers, out at trouble, second divergence, great exit, back in on the good side, and then it reaches trouble, and you don't believe it. Boaz, I like this. You got greedy. You saw it. You knew about it. You knew that was an area. And you held it anyway, right? Held it anyway. Gosh, I've done that. John and I had this conversation this morning. In a market that trades so much money every day, those were both beautiful trades, right? That was a beautiful trade. There's probably another one coming. It's okay to get paid at areas. Everybody has a different plan, though. Some people hold for huge moves, and God bless you, I can't do it. Some of you hold for giant moves. My brother looks at a 15-minute chart, and he says, my triggers are down. And I'll show you exactly what he did this morning. He took this long, and he held it all the way up to 1-to-1s. Because his 15 minutes said, we're going to the 1-to-1s. And he got paid right at the 1-to-1s. Because that was the most likely spot for the market to stop. And it's amazing. He's got the stomach for it. I don't. Here we go. I'll bring it over. I'll show you guys this. That's him holding it all day long. That's his exit. That's him getting back in to make it, to add on. Some of you have the stomach for that, right? I don't. Trina, I can't do it. I know my limitations. It doesn't mean that it's right or wrong, but we all have what's right or wrong for us. Some people won't eat sushi. I love sushi. Some people like chocolate cake. Some people prefer vanilla. We all have different ways, right? Boaz, you like a runner. You're like, man, I just made all the money. Let's see if it breaks. Look at the momentum. Totally cool. Nothing wrong with it. I just kind of have to point it out in here because that's my job. All the momentum, nothing in the way. Jump in, get paid. Base hit. Base hits pay bills. So two very different approaches. Some of you like to get paid, get out. If you look at Pete's charts, Pete takes 10 ticks on everything. 10 ticks on everything. Puts money in the bank. And then if it runs, he's cool with the runner. And if it doesn't, he's cool not catching it because he knows the next trade's coming. Boaz, you do a great job of that too. Momentum, potential to break, pull back to the area, get paid, out with a loss of momentum. This is a good look. This is a good lesson here. You guys want to see something cool? This is why the large chart leads the way. Large chart showed the potential to break. Small chart did not. This is why we let the large chart lead the way, because if those moving averages, those small triggers can get up above on the large chart, you're not always going to see it on the small chart. That's why Pete took a shot. That's why he got paid at trouble that hadn't broken. And when that divergence prints, GTFO, made his money. Wait for the next one. Great job, Pete. Guys, if you're brand new in here, you're seeing different styles. You're seeing trades that aren't high probability trend trades. You're seeing trades that have resulted from people spending time studying patterns, from people posting in the room asking questions, people presenting over and over and getting feedback on the chart read so they could develop their own plan. And you're right, Boaz, that's the perfect momentum trade. All the momentum, break through, snap back, giddy up all the way. That is the perfect momentum trade. You didn't miss it though. It just wasn't yours. Just wasn't yours. So guys, this is why I say don't be the trade police. Don't try to do what someone else is doing because they're in a different spot, right? First year medical students don't get to do brain surgery. They're not there. Learn your basics. Get there. Miss Trina, let's see what you did. Down, transition, room to targets, pulls back to resistance, close below. Ooh. All right, so let's ask, Trina. Are you ready? Yesterday was a hard day. Not gonna lie. Yesterday was a difficult day to trade. Split volume on every market because all the contracts were rolling. So Trina, price broke above resistance. Do you see it? Do you see that gap, the sunlight? What does that make this? What's that turn resistance into? Support. It's a prairie dog. Gotcha. The prairie dog gotcha. And you may not see it in the moment, but this is a good go back and look at it. Guys, this is one of the biggest challenges that new users tend to make. Is when an area breaks, support becomes resistance, resistance becomes support. It's just this wonderful thing that happens. So it remains resistance until it breaks, and then it becomes support, and it remains support until it breaks, and then it becomes resistance. And what happens is a lot of people try to take that little peak. It's still support, and that little peak is what I call the prairie dog. And it's not pulling back to an area and breaking. It just stays support. And then suddenly the market goes higher, right? And that's why the prairie dogs tend to fail. So we don't usually see it in the moment as a brand new user because you're excited about the trade. And you're excited, oh, I finally got the close below. And you don't do that very basic analysis. So on Simulator, these are great to take. Post them in the room and we'll have that conversation. So Trina, everything looked perfect for a short trade, right? And that was the one tiny little thing that changed the dynamic of that area, that changed the whole dynamic of your trade. And the cool thing is you don't see it in the moment. And I know you didn't see it in the moment. But if you go back and you study, if you post, if you present, this conversation sticks in your head. And next time you go to take the trade, you may see it. Down, transition. Is this where I messed up? That turn to support. Trina, you knew the lesson. You didn't even tell me that was the next picture. That's perfect. Which means you went back and you self-analyzed and did it wonderfully. Great read. Isn't that funny how once the pressure of a trade is off, clarity just hits? Up, strong side, room to targets. This one fully broke. It never pulled back though, did it? You tried a momentum entry, but it didn't have momentum. That's it. Tried the momentum entry without momentum. And it was a tough day. 158, 158, so just no momentum to push the momentum trade, and then there's your pullback to the area, and it never gave the trend trade entry. Can't mix two trades together. We've all done it. We've all done it. We've all said, here's my momentum trade. Oh no, I forgot momentum. Here's my trend trade. Oh crap, I didn't wait for the right entry. And I don't know. I think trading is just keep doing it, right? Keep learning. One step better every day. Strong trending market, 30 bars in the same direction. Absolutely nothing in the way. Pulls back to the mid band. The challenge, Pete, is that you had a 50 fib. Oh, there it is right there. Okay. So you guys want to see one of Pete's tricks? I used to do this a lot. If I say strong trending market and clear path, I'm fitting rules. Sell the midband until it doesn't work. What's the reality? Pete, your trade came right at a fib in a strong trending market. You got lucky that it broke. Does that make sense? You're pointing down here where life is good. You traded up here where you didn't know if it was going to break or not. And you'd already had 3 divergences right at it. I hope that makes sense. And it worked. It doesn't matter. Strong trending market doesn't negate fibs. Strong trending market means that momentum is understood, path is clear until I reach the next fib, at which point I have to pause and wait for the path to clear again. Does that make sense? That's one of the things about a strong trending market. It will end, and it typically ends at Fibonacci. So letting the triggers get below creates an advantage. Trading from the correct side of the triggers creates an advantage, especially if you're trading into trouble. I don't worry about you, Pete. You have your plan. I just have to point it out. We're in the room. Momentum. Price hadn't quite reached the fib. Pulls right back to the area. Enter with room. There you go. Nice trade, Boaz. Ron. Price cleared trouble, ran the stop, squeaked too tight, and gotcha. If it's just momentum, protecting. And that's the one, right? It's the same look, Pete. You guys had the same thing. Just let it get below that trouble a little bit. Ron, we don't see you with a lot of oopses. It's fun how everybody has a different plan. Like everybody starts in the same place, right? Have you guys ever heard the old thing? If you hand 10 people paint and say paint a flower, they all paint a different flower. If you hand 10 people the exact same indicators, they all look for different entries, right? With momentum and nothing in the way, my rules say sell a pullback, add an area inside of triggers. Good heads up, Boaz. Do you guys see it? First, it's momentum. All my triggers are below resistance. I have room to trouble. There is my pullback. There is my entry. Stops where the market shouldn't go. First profit target is at $100, which actually is right there. Second target's at $200. If I get a reversal bar, I'll reduce risk. If I don't get a reversal bar and it comes where the market shouldn't go, I'll get stopped out. 100% KISS plan. I'll listen to it this afternoon, Ron. You have a fib. I didn't. I might need to reload though. I crash a lot. I'm going to reload historical data. I may have a problem with my chart, but that was it. That was the perfect trade. I'd take that trade 1,000 times. You know, I had someone in the room tell me, you shouldn't take losers in the room, Mark. That's not good for selling software. I think it's good for being a good human. You will take losses, guys. You will enter the perfect trade and it won't win. You will enter horrible trades and they will win. The idea is that you can do the same thing every time. All right, let's see what we have here. Got in late, saw the trend changing, but I wasn't sure where to enter and where to set my stop loss because you don't have rules met yet. 57.50, so your triggers were still up. Pulls back to the outer band. All right, so I think we're good on this one, Papa. So I'm going to do the whole annotation, if you don't mind. Because I think it's important, guys. As you're learning the software, and remember, these annotations aren't for me. I can't stress that enough. But if you talk about direction, momentum, targets, right? You talk about your entry rules. What you're doing is you're writing a recipe for success to do the same thing. So in this one, the triggers hadn't rolled yet. The triggers were still up. I'm about over. The triggers were still up. You were on the weak side of triggers, and you had room to trouble. Is that what you saw, Papa? It's large chart triggers define direction, and until this bar finishes, they're still up. They haven't rolled yet. Until this bar finishes, they are still up until they're officially down. So they were up. You were below them, which means you're on the weak side, which means that you have to be aware of trouble. And you had room to the one-to-ones, it looks like. Now, one of the differences is you've got these areas of support and resistance, right? So you're using an outer band, which is okay. I want you to see the bar that finishes above the small triggers. Did you notice that the market didn't go up until you finally got a green bar above the triggers? You finally got an up bar above the triggers. And that's when it started in the direction of the large chart. That's the best lesson on this chart. It just kept going down until you got that close above the triggers, and that's where it started up. Does that make sense? Cool. So let's go the idea of buyers and sellers. So as long as the large chart is up, we're going to say buyers in control, let's look up with them. Does that make sense? I'm going to cover the large chart so I can give myself some room. Cool. And then weak side of the triggers, just all that says is I may need to get paid at trouble, which means that magenta line was a great spot to get paid. And room to trouble tells me go look for an entry. So the buyers are in control. Get rid of these things. I may need to manage. and I've got room to get paid. I can't wait for a trade. So if the buyers are in control on the big chart, this push down is the sellers giving it their all to take over. Does that make sense? And then they fail and they close above. And this is the buyer saying, no, we're in control. Stop, enough, cease and desist, which means that your stop will go just below the seller's failure point. So you can use these pivots saying the sellers failed, the buyers took back over, we're back in sync with the large chart. The sellers are going to have to regroup and fight harder to come get my stop. Does that make sense, iPapa? And I make up these stories, right? There's not like a group of sellers going, get them. But that's exactly what it is. Short-term seller fight. And this right there, that up bar on the right side of the triggers is the buyers saying, nope, we've already got the trend, we've already got the room, the direction is ours, the path is ours. This is where we're going to start back over. And sure enough, they push up. And that's the whole logic, is that when the market is doing this, there's almost always one of those. Nexgen teaches you to recognize where that's most likely to happen so that you can use it for entries, so that you can have intelligent stop placement. And if you tried to get in before that close above the triggers, whether it was an opinion about a blue line or an outer band or a divergence low, you got run the fudge over because we never got back to the good side of those triggers. That's the whole logic, is that reversals come from the weak side of the triggers, and the reversal on the small chart just puts you back in sync with what the large crowd wanted. Did all that make sense? And guys, remember, in your first week, you're going to hear 1,000 things, and maybe 5% of them are going to register. And then in your second week, the lessons are going to start to stick. And then in your third week, you're going to start to latch onto these things, and you're going to find it becoming a little more effortless. But guys, trading is it's a journey, right? It's a marathon. Nobody became a millionaire in a week except lottery. Entry point above the small triggers for a long trade, Papa. Entry, there you go right there. Above the small triggers for a long, below the small triggers for a short if the rules are met. And all it is, and I'll show you on the Renko charts too. This is a pretty good example. As long as I don't get a close below the small triggers, do you notice that it kept going up? They tried and failed, they tried and failed, they tried, but it wasn't until they actually got a close below that there was any indication that they might want to actually push further. And they didn't. But this is the same concept. This is it on Renko. So once they close below, look at the push down. There's your fight. Pretty cool, right? So as long as you are left of these triggers in an uptrend, it's probably not going down. And as long as you are right of these triggers, it's probably not going up. And that's the patience piece. Once you accept that, you don't try to take this close. Oh, well, it's a down bar. Oh, it's in an area. You say clever things like, the small triggers are going to whip my ass. They always do, more often than they don't. I'm going to sit on my hands and I'm going to wait. And here's one of the things too. Do you see how these triggers are just flat? They are down, but they're not down with conviction. But they are down. And if I take an entry right here at 80, I have 12 points to get to trouble. I have 43 seconds to think about it. My triggers are down. I've got room to trouble. I pulled back to resistance. The only thing I need is a close below these small triggers. Looks like we may have already had it. That was our close below right there. So I'm going to sell. My stop would go where the buyers failed. Oops, I put the wrong... I put my profit target where stop goes. And I can put a profit target where? Right there at trouble. It's just a one lot. But that was the close below. I'm getting back in line with the large chart. Mid-band is my first sign of trouble. And it looks like it held for now, right? There's the one-to-ones right there. Are they going to make it? That's your trend trade. They did. They made it. And they may keep going. But do you see it? That was your entry. That was your rules-based entry. Triggers down, room to trouble, close on the correct side of the triggers. We got paid at the first sign of trouble. They're still going. Does everybody on TradingView see it? That's your trade. That's the one thing that I teach every day. Go with the direction, have room to trouble, wait for the close on the correct side. And Trina, why is it okay to take the peak? Because check it out, guys. Whoops. My trend trade is trading, get off of there. My trend trade is trading from resistance. There's my pullback to resistance. It never breaks above, so it remains resistance the whole time, which means that that entry bar is trading from resistance, below resistance, with room to trouble. Does that make sense? It's the easiest trade you'll ever take if you just wait for it. It's the easiest trade you'll ever take if you just wait for it. Strong trending market, clear path, text and marker, you get in below trouble, half off, big run. Nice trade, Pete. Perfect. Boaz, momentum, path. Well, dying momentum, clear path, no areas inside of triggers. And it forces you into panic mode, doesn't it? When we talk about where the market shouldn't go, it's telling you I'm already on the wrong side of things. If you take this entry, manage assertively. And good job managing assertively, Boaz. Don't have the momentum. I do have a clear path. I can't define an entry. 2/3 of the advantages are gone. So let me show this picture. If the perfect trade, the ideal trade, the best of the best trade, has momentum, path, and entry. Not the only trade, my friends, but the foundation from which your trading empire is built. That is the perfect scenario. That's high probability. Each indicator on every chart agrees with the rules for the trade, guys. This is the one where I can't wait to take an entry, and they're going to have to come get me if they want my money. If I notice one of my advantages goes away, and it might be momentum, it could be the clear path. Pete shows this one all the time and manages it beautifully. And it might even be the entry area, and I've got to get a little creative. Then I'm a medium probability trade. And a medium probability trade means that most of my indicators line up for a trade. However, a small issue exists. My issue is identifying that one of my advantages has flown south for the winter. I have to manage this trade a little more assertively. I have to take those quicker profits. I have to get to a zero loss level as soon as I can because it's not the perfect trade. It's a little more aggressive. And if I notice that 2 out of 3 of my advantages are gone, I am obligated, not really, but I should be, obligated to say out loud, yell at my screen, you are a low probability trade. The likelihood of you winning is far less than the likelihood of you losing. And for a lot of you, there's got to be a point where you look at your chart and you say it's low probability, and you say, why? Why? As great as this software is, as accurate as my methodology is, as insanely accurate as my entries are, why am I even considering this trade? Well, you're considering it because you're bored, because you have the fear of missing out, because what if it works and I'm not in it and it wins, then I didn't win and that makes me a loser and kids will tease me and that guy at the grocery store will call me out in the freezer section, right? You'll find every reason under the sun to take that low probability trade. But do you need it to reach your goals? That's got to be the question. You're in control of the entry. You're in control of how you're going to manage it. Knowing what you're up against gives you the ability to know what you're in for before you're ever in the trade and help you choose whether or not you want to take that trade. Then the same is true on TradingView, guys. If you define direction and you trade with it and there's nothing in the way and you wait for the entry, it's high probability. You guys are showing me that it typically wins 70% of the time. If one of those goes away, it's not the best trade anymore. If two of those go away, it's a big bag of suck. Why are you taking that trade, right? Because you're bored. So 2 out of 3 doesn't mean that you can't take it. I'm not the trade police. Boaz managed it like a champ because he knew it wasn't perfect. Great job, Boaz. Momentum, path, entry, and they just didn't work, huh? Sometimes they don't work. It's 3 triggers through, right? Have I mentioned, watch this. Man, I'm struggling here, guys. There we go. That's the perfect entry. That's the perfect trade. Boaz had all the momentum. He had the perfect entry area. Only had 3 triggers through. Was it 4 at the time of entry? There's your bar where you got stopped out. Were they through? Were they in the moment and then they backed up? And it may be, right? So 3 triggers through. 3 triggers through. And Boaz, perfect. No divergence. Odds favorable momentum. Perfect entry. Absolutely beautiful, right? That is the best way to take a medium probability trade, except for one thing, Boaz. There's one thing that you missed that plays into it from a weak top. Because when I have a weak top, that mid-band area and any fibs around it are more likely to create a bounce. You saw the second divergence and you got out. Perfect management on a medium probability trade. Does that make sense? That was your okay, I don't need to be in this trade anymore look, and you got out of the trade. Absolutely perfect. Absolutely perfect. They won't all win. Management will keep you from losing big. Ron, really? All the momentum, room to trouble, jump in, get paid. Could it be that easy? With momentum and path, find a way? This is called the chili dog, my friends. Ron invented this one because he studied the high probability trend trade. And he said, wait a minute. hold the phone if momentum and path are the basis for everything? The only reason to even look for an entry, well, there might be something to do. Unless you follow your stop too close. There might be something to do before the trend trade. And if this trade failed, hell, it might just turn into a trend trade. Nicely done, Ron. All right, Justin, let's see what's up, brother. So can we do two things? You said you don't know what happened today, not following rules, jumping in, hoping to hit my target. I was negative 750, made it bad, went negative 750, jumped the fudge in, and I'm done with 350. All right. So why would you jump in? Let's just ask. Because here's the challenge, Justin. Are you ready? I don't have any idea why. Okay, so you have momentum, right? You're making me line up stuff, right? So what you're doing to me here, and I love you, don't get me wrong, is you're making me line up these, and you're making me guess why you did it. You haven't written anything on the chart. So will you work with me on this one? You love the momentum, right? I love it. And you've got it 10 times over. Don't be sorry. This is me working us towards better conversations. Talk to me about your path, Justin. Tell me what you see. No, I'm going to try and give it to you nice as well. Tell me what you see on the path. Do you see, and there's only 3 options, right? There's a clear path, which means that 4 triggers are through. Or there's potential, which means you have at least 2 triggers through, right? One of them is high probability. One of them requires a level of caution. Does that make sense? Cool. So which one did you have? Potential or clear? You need me to make it bigger for you? And this becomes real important, Justin, on those jump the fudge in trades. Do you see how where you're getting in, it's only the potential? Not a bad thing, brother. Not a bad thing at all. I can't stress that enough. But because it's potential, you're going to say something clever like, it's only potential. I need some goodness on my small chart. That's all you're doing. You're like, man, it's only potential. I'm going to try to trade that momentum. I want to make sure that the small chart's pretty rock star. Does that make sense? I love the jump the fudge in trades, Justin. So I'm going to give a quick little lesson on small chart stuff that can create problems. So on a small chart, I'm really trying to get this going here. And it doesn't even look like you're following the large chart momentum. Is it fair to say that you're relying only on the small chart momentum? Otherwise, you probably wouldn't have gone short right here. And that's okay. So I'm going to show you something pretty cool. Every line on a small chart is an area that can create a bounce, whether it's a divergence, whether it's a fib, whether it's a one-to-one. All of these areas can create reactions. And you'll see it. See how when it came back up to that divergence high, there was a reaction? And when it pulled to that mid-band, there was a reaction. And when it pulled back to that divergence high, there was a reaction. And from that divergence low, there was a reaction. So I like to go with the idea that lines create bounces. Let's open up NinjaTrader real quick. Lines can create bounces. Oh, there's a beautiful example of it right here. So if I want to jump the fudge in, Justin, having large chart momentum is a really big part of it. Having room to get to trouble on the large chart is a really big part of it. Does that make sense so far? And I'm going to tell you right now, dude, there's days where we just can't wait to be in the market and we do exactly what you did. But because you posted it, I'm going to give you some cool things to think about. Do you see right here? You've got odds favorable momentum, right? You're above the large triggers and you've got room to make a little money up to that fib. That's your jump the fudge in, right? And then when you get to the fib, you say, uh-oh, this line could create a bounce. And you want to jump in, but you go, whoa, wait a minute. This line could create a bounce. Let me get above it. Let me get out before things change. And all you're doing is you're like, man, jumping in's fine. When I got momentum, nothing in the way on the big chart, there's a way to do it. And guys, this is one of the greatest trades ever. I hated this stuff when I first started. But what happens is you have to be hyper aware of lines on the small chart. Make sure you have room to make money. When it turns, odds favorable, do you see it? Room to trouble, bingo, bango. And then it bounces. And now if we were just going to jump the fudge in, Justin, I got to get below fibs. I got to get below it because look at that. Reaction, reaction, reaction. I want it south. Does that all make sense? And this is how you take the belief that lines can stop the market and it creates just a little bit of patience. And Justin, every one of us in this room goes batshit crazy some days. Every one of us. Not everyone will admit it, but every one of us. So by posting in the room and having the conversation, maybe we're just a little less likely. Emptied a couple bottles of Malox because of that trade. And then Justin, check it out. It never really breaks below. You see how it's not going anywhere? That's the perfect example live in front of you. So it buys us a little bit of patience. And then let's go to the lesson that we had earlier. If you do jump in, that reversal bar is your loss of momentum that says, hey, maybe it's time to get out. So when you jumped in here and the reversal bar printed, and it's hard because I can't make your chart any bigger than that, you could have been out on the reversal bar, not all the way down at the midband. Does that make sense? And this one, you could have held till the reversal bar. I love it. I love stuff like this, Justin, because what you're doing, oh, look at that. And once it got below it, so momentum and room, and Justin just jumps in and says, let's see if they push. Let's see if they make it to Fibonacci support with all that momentum and nothing in the way. Boom, they most certainly did. There's a way to do it. How cool is that, guys? And look what happened when it hit the fib. Instantly. I teach the highest probability trades. It's those very basic concepts that you get from them that set you up for more. And is it just me, or do you look like an absolute badass when you get out of your position at the low tick of the move, right at a fib? Because I know where the market is likely to go. Drop the mic. Here we go. So you got to learn the foundation so you can go next level. You got to learn momentum so you know when a market's hard to stop. You've got to learn clear path so you know when there's nothing in the way to give a bounce. And then all of a sudden, there's all this opportunity. And then Justin, if we were actually watching it, somewhere up here you get in around 96, and it's a much bigger trade. But I was off flapping my gums somewhere. Does all of that make sense? Does that make sense to the rest of you too? Just because it's not your chart doesn't mean it's not your lesson. You ever sat in church? Sounds like the preacher's talking directly to you, even though he wasn't. He was talking to everybody, but you're like, oh, this is my message. Don't trade in determinations because it's more likely to lose. You're welcome, Justin. I appreciate that you would post. It's hard to do. It's hard. It's so hard to put yourself out there and to say, man, I went a little crazy today, but you came back positive. Good job. Guys, they can't make decisions. They're bouncing from here to here, back and forth, back and forth. Triggers are flat. This is my look where I call my wife and see if she wants to have lunch. Or I say, you know what, I'll be back in 30 or 40 minutes. I'm going to go hit golf balls. I'm going to go walk the dog. I'm going to do something other than just hope. So, all right. Still holding, isn't it? It's wild that we knew that it was there. And like they had a script. And that's true, Ron. If you wouldn't have posted and gotten feedback, there would be no chili dog. But doesn't it look like it? Like the market knew exactly what it was going to do, where it wanted to go, where they wanted to take profits, when they lost momentum to go in the direction, when they were done trying to push up, when they knew in no uncertain terms they were going to continue up and you guys got in, where they were going to stop. They knew where support was. They tested it as resistance. They knew where the one-to-ones were. They tested them as resistance. They knew where support was. They tested it as resistance over and over. Guys, if you scroll back and just look at your large charts, you will be freaking amazed at how accurate the software is. All you have to do is figure out how to sit on your hands until it's your trade. That's the hardest part of trading, guys. The patterns are easy. The rules aren't difficult. It's only 2 charts. Doing nothing when there's nothing to do will prove to be the most difficult thing in your day. How do you overcome it? You've got to trust the rules. You've got to believe that line could stop things. Amen. Change your life. All right, guys, I'm going to walk away for a few minutes. When I come back, we're through all the pictures. I don't have rules, Matt. We'll pull the trigger if we get it, but man, we're going to have a whole hour to answer any questions that you have. Hard with your ADD. Do you have distractions set up, Ed? Like for me, I literally have to have, and it's off to the side, but I'll have blackjack, I'll have Scrabble. Like I have to have a distraction. Miss Trina, have a great day. Thanks for being here today. Thanks for posting in the room. Like for me, I have to have that distraction because if I stare at a market for too long, I'll fabricate. Guys, odds favorable momentum, 3 triggers through. I would need a pullback to an area inside of triggers, which I don't have. No entry rules met. I know John listens to music. I'll take my sketch pad and I'll draw just anything, right? Little project, anything that keeps you from hyper focusing on things. Because if you watch, especially the small chart, it'll drive you nuts and make you feel like you're missing out. There's some people that I've worked with before that won't even go to the small chart until this is perfect. It's only 3 triggers through. Divergence says it's more likely to hold than break. Have to be patient. Have to be patient. So maybe that'll be helpful. All right, guys, I'll be back in a few minutes. Go stretch your legs. Back in 5. Home stretch. Tesla nerd. How we feeling today? What can I do for you? I pop up. Little more clear each and every day. Justin, great lesson. Z Robot, how we feeling? Jeffrey Dean, oh yeah, good to see you. Chariot, any questions? Andy V, hope life is good. Ron C, Miss Donna, VC Wayne, Morgan Jr., Izzy, Big Rat, Miss Kathy. What can I do for you guys? Alan R, anything on your mind? Alex B, anything got you vexed? Pete, you have your plan 10 years into it. Gab, how about you? Dave, what can I do for you? How many educators will beg you to let them give you feedback to make you a better trader? I'm doing it right now, guys. If you are evaluating the software and you have questions, reach out. If you don't want to do it in the room, reach out. Send me an email. Send me a private message. Aaron, anything I can do for you? Miss Jen, I see you sitting waiting in the wings. Jim H, George Val, Mike Lynch, Ryan L, Boaz, Miss Mary Rocks, Joel Beal, Cam, anything I can do for you? My life revolves around getting you guys the answers that you need. Can you guys hear me? Am I talking to myself? At least let me know you can hear me. Okay. Thank you. You guys are horrible for my self-esteem issues. You know that, right? 3 triggers passed. Momentum. Pull back beyond the triggers. Thank goodness the one-to-ones held. Boom, all the way down to fibs, Boaz. Nicely done. Maybe need to wait for the reversal bar down. That's your choice, right? In a situation like this where I can't define entry, where it's only potential, I love a reversal bar down. It gives me something to put my stop behind. You had every reason in the world to take the trade. Nicely done. No worries, Miss Mary. Not everybody will have a question just because I call you out. But one of the things that I've realized is that people struggle participating, guys. And that's for whatever reason. I'm not going to try to psychoanalyze that. Could you imagine having a tennis coach and telling the tennis coach, well, I don't want you to see me to play. I might not play well. I've got a golf coach. He'd never let me get away with golfing in private and then asking, I hope I get better. I paid for the coach. It's like that gym membership I have, guys. I've had it for 2 years. Haven't lost a pound. I'm going to go in next week and see what the problem is. I paid for it. Doesn't seem to be working. How do you set up bar up, down, and trade? Boaz, I'm not completely sure. Like to enter on a reversal bar? Like if I needed a reversal bar to enter? I want to make sure that I'm answering. Cool. So let's say I needed a reversal bar for a short. I could right click and put a sell stop right on the reversal bar marker. So the only way it'll ever get me in this trade is with a reversal bar. Boom. And then I know exactly where to put my stop. Obviously, that's the wrong trade. But that would be the way to do it. And then if I needed a reversal bar up for a trade, I'll put a stop, a buy stop in play. And what it does is it forces it. That's how I trade the NASDAQ, Boaz. Like if I need a reversal bar up for a trade, I'll put my buy stop, reversal bar, plus a tick. And that's just me on the NASDAQ because the NASDAQ moves so fast. But if you never get the reversal bar, well, you never take the trade. And once you get the reversal bar, you know where to put your stop. You've got the momentum. There's room to trouble. All those great things. And I thought I did. There you go, Boaz. Buy and stop for orders. I did a little just little visuals of how to do it, go in both directions. But I'll use the reversal bar marker. And what that does is it absolutely insists. So if you don't get a reversal bar here, you never end up in the trade. Is it better than enter, buy, or sell? I don't know if it's better. I guess that depends on your reactions. Take care, Ron. Have a great afternoon. If the market's moving real fast, I may not have the reaction time, right? So I'm like, okay, if I get a reversal bar and I've got my finger up here, I might get in way up here. But if it's waiting, then at least it takes me out of the equation. And you still might get slipped. and I certainly did. So there's some people that will wait for the reversal bar. And then once the reversal bar prints, I've seen people put a limit order right there and say, now I've got even less risk if they come back and retest it. So there's a million ways to enter the market. I love the idea of a reversal bar for confirmation, though, if if it needs it. And guys, here's a great example of why simulator numbers mean absolutely nothing. We went through an entry example without rules met 5 times. We're down $500. It doesn't matter. We got some lessons out of it, right? We got some lessons out of it. That's what simulators for, guys. Get all the lessons with no threat of loss. Price into the divergence low. It's like they knew about it. Look at the reaction instantly, right at it.